Last night, something extraordinary happened in the COMEX vaults that they never wanted you to see. 40% of all registered silver, the silver available for delivery, was wiped out, gone, vanished in a single reporting period. And the names behind this massive withdrawal, you would recognize every single one of them. Now, this data wasn't supposed to surface until next week's official report, but someone slipped up. And now we have it. By the time the mainstream financial news even touches this story, it's going to be far, far too late to act. To understand why this changes everything and why they tried to bury it, let me show you exactly what we're looking at. If you've been following this channel for a while, you already understand how the vaults work better than 99% of investors out there. But for anyone just joining us, here's a quick breakdown. COMEX vaults hold two main categories of silver. The first is eligible, which is metal sitting in storage that's already claimed and spoken for. The second is registered, and this is the one that matters. Registered is what's actually available for delivery to back all the paper contracts in the entire system. It's the real physical supply. For months, we've been watching registered silver decline, slowly, strategically. It was always in controlled increments designed to avoid triggering any alarm bells. 2% here, 3% there. These were managed drawdowns to keep the illusion of stability intact without anyone asking uncomfortable questions. And that pattern held for nearly 2 years, until last night. What appeared in this morning's data shattered every single pattern we've been tracking. And that brings us to what actually showed up, and the reason I dropped everything to record this for you right now. Here's what the leaked data reveals. 18.4 million ounces of registered silver were drained from the COMEX vaults in a single session. Not spread across a week, overnight, in one single move. This was not in the scheduled report. It surfaced in an early filing that appeared very briefly before it was quietly revised. The discrepancy between those preliminary numbers and the corrected version tells you everything you need to know about their intentions. Now let's break down exactly where this metal disappeared from. JP Morgan's vault took the largest hit, with over 9 million ounces vanished. Brinks lost another 6 million. The remainder was scattered across smaller depositories, likely trying to stay under the radar. But here is the detail that should stop you cold. This all happened during Asian trading hours, between 2 and 4 a.m. Eastern Time. It happened while the Western markets were asleep and nobody was watching. The last time we saw a single-day drain even half this size was back in March of 2020, right before silver exploded from $18 to $30 an ounce. Let this sink in. 40% of all deliverable silver, not pledged to someone, not just relocated to another vault, gone, completely removed from the system. Now, I know some analysts will try to dismiss this as just a routine inventory adjustment, but here's what they're refusing to connect, and this is the part that should genuinely concern you. While the mainstream financial media is obsessed with tech earnings and meme stocks, this is what the smart money is actually tracking. Let me connect the dots that they don't want you to see. The timing of this drain is not random. It happened exactly 3 days before the March options expiry, which is precisely when the big bullion banks have to manage their massive short exposure. It also lands right before next week's BRICS Commodity Summit in Shanghai. Do you think that's a coincidence? Now, let's ask the obvious question. Where did 18 million ounces of physical silver actually go? Metal doesn't just evaporate, it moves. And shipping manifests from the ports of Long Beach and New York are showing a significant surge in eastbound precious metal shipments over the past 72 hours. The final destinations listed? Shanghai and Mumbai. The official narrative, when it comes out, will call this a reclassification. A routine vault adjustment. Nothing to see here? Move along. They will try to sanitize the numbers by next week's official report. But here's their big problem. You can't reclassify metal that is already loaded onto cargo ships heading to Asia. This pattern matches exactly what we witnessed in late 2024, right before silver ran from $28 to $41. So, what does this actually mean for you, for your stack, and for what's coming next? Let me break down the 3 scenarios that we need to prepare for right now. Scenario 1. If this drain rate continues at its current pace, registered silver at the COMEX will hit absolute zero within 6 weeks. When that happens, price discovery will shift entirely to the physical market. The paper prices will become pure fiction. COMEX will lose complete control of the pricing mechanism they've dominated for decades. Scenario 2. They attempt to paper over this crisis with reclassification tricks. They'll try to shuffle some eligible silver into the registered columns, buying themselves another month, maybe 2. But that's just a temporary bandage on a wound that's hemorrhaging. The structural problem, the lack of physical metal, isn't going anywhere. Scenario 3, and this is the big one. This becomes the catalyst that finally shatters the paper versus physical disconnect permanently. The moment that dealers and large buyers fully grasp what's unfolding, premiums on physical metal will explode. We are already seeing the early tremors of this. Premiums jumped from 8 to 12% overnight across several major dealer platforms just this morning. The window to position yourself before this becomes a mainstream headline is now measured in days, not weeks. We are watching the next 14 to 21 days extremely closely. Specifically, we're watching for Monday's vault report, for the Shanghai premium spreads to widen, and for major dealer inventory levels to start collapsing. This brings up the question I know you're already asking yourself: what should I actually do with this information? I'm not here to tell you what to do with your money. That decision is always yours and yours alone. But here's the framework that I am personally using to navigate this situation. If you have been waiting for a clear signal to add to your position, this data point is worth your serious consideration. Not an emotional reaction, but deliberate, careful consideration. The balance between physical versus paper exposure becomes absolutely critical now. When vaults are draining at this velocity, paper claims on silver carry exponentially more counterparty risk. Physical metal in your possession, on the other hand, answers to no one. Your watch list for the coming days should include 3 key things: Monday's updated vault report, the spread between Shanghai premiums and COMEX prices, and major dealer inventory shifts. These are the indicators that will reveal whether this is the beginning of something truly historic. One critical warning: avoid panic buying. The smart money always moves deliberately and strategically. Those who are ignoring the vault data entirely are navigating this market completely blind, but you are not in that category anymore. At the end of the day, this isn't just about one data leak or one overnight anomaly. It's about something far bigger. We are watching history unfold in real time right now. Most people won't understand what happened until long after it's all over, but not this community. That is exactly why this channel matters. We share what we uncover. We prepare together. We don't wait for permission from the mainstream sources to understand our world. Drop your take in the comments below. Are we witnessing the beginning of a full-on vault run? I personally read every single comment. I'll be monitoring the overnight data very closely and will report back tomorrow immediately if anything else surfaces. Make sure you're subscribed with all notifications turned on. When the next leak drops, you need to know first. Hit that like button if this opened your eyes. This is John Funds AG. Stay sharp, and I'll see you in the next one.
Quick disclaimer: this video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.